Good morning and welcome to the Minnesota Real Estate Show. Thanks for joining us here. It is the 15th of October, 2022. We're live here every Saturday morning for the Minnesota Real Estate Show, hosted by our good friends at Luminate Home Loans, Luminate Bank. Today in studio have Alex Grip with us. The show is also hosted by Scott Wolmering of the WE team, the Minnesota Real Estate team, RE/MAX Advantage Plus, and my name is Ryan O'Neill with the Minnesota Real Estate team and RE/MAX Advantage Plus. Thanks for tuning in. Thanks for joining us wherever you might be catching the show. We are live from, again, 10 a.m. until 11 a.m., talking all things real estate related, mortgage related, insurance related. Have Brad Sanford, Farmers Insurance, in studio with us today. Our friend Scott is not feeling well. He is out sick. So hopefully, Scott, you get some rest and feel back to 100% soon. But good morning, guys. Thanks for joining us. Good to see you.
Good morning. How are you doing?
Good to see you. Good to see you. Alex, doing an awesome job from a mortgage standpoint. Brad, good to see you there, young man.
Good morning, sir. Were you surprised by the snow as I was?
Yes. A little bit of snow.
I mean, like Alex said, we know it's coming, but that was soon.
A little bit of snow this week.
Yeah.
We are set to go live here just very briefly on, again, Twin Cities News Talk, AM 1130 is where the show is broadcast. Throughout the week, if you have questions, comments, thoughts, 612-294-6949. Again, 612-294-6949 is how you can call us and text us. Normally in the first segment, we like to dive in from a real estate update, a mortgage and a real estate update, just to see what's new here in the Twin Cities. And again, as the discussion goes throughout the show, don't hesitate to comment on the social media stream, wherever you might be seeing us, Instagram, Facebook, YouTube, Twitter, Instagram. Please don't hesitate to comment on anything. Alex, a lot going on in the mortgage world. It'll be a good discussion.
Yeah, can't wait. Yeah, still some opportunities out there. You know, you got to be a little bit more strategic, but yeah, still some great opportunities out there for buyers.
Yeah, here we go. We're going live on air. Thanks for tuning in, everybody. Good morning and welcome to the Minnesota Real Estate Show. Thanks for joining us and thanks for tuning in. It is Saturday, the 15th of October here in 2022, and we're live here at the Minnesota Real Estate Show every Saturday morning. This show is hosted by our friends at Luminate Home Loans and Luminate Bank. In studio today, we've got Alex Grip. The show is also hosted by Scott Wolmering of the WE team and the Minnesota Real Estate team of RE/MAX Advantage Plus, and my name is Ryan O'Neill with the Minnesota Real Estate team and RE/MAX Advantage Plus. Thanks for joining us and tuning in Saturday morning. 612-294-6949 is how you can join us by phone or by text anytime throughout the show. This is a live show that we've done for over 15 years now here in the Twin Cities every Saturday morning. We also stream it on all of the social media channels, whichever your favorite one might be. Don't hesitate to pop in there if you'd like and insert some questions. But got to welcome on, again, Alex Grip, Luminate Home Loans, and Brad Sanford, Farmers Insurance. Good morning, guys. Thanks for being here.
Good morning.
Good morning.
Brad, you were just commenting a little bit of snow this week.
Oh, absolutely. I did not expect it that soon. I don't know why. I was born in Minnesota, right?
Yeah, right?
Right. Along with that, can you guys help me out with something? My beautiful, lovely, intelligent wife, Cindy, and I are having a debate of what kind of chili do you like? Like right around this time.
Right, kind of chilly.
Do you like hearty, like thick? Or do you like it a little more soupy or a little more liquidy?
I don't know. What do you think, Alex?
Oh, thick all day.
Yeah.
Thick with 3 C's.
Yeah.
Me
too. Mike Dubs, Mike from K102. Mike, what do you think there, bud? You like a good thick chili?
My guy.
Hey, first segment, we always like to dive in real estate wise, mortgage wise, give you an update of what's cooking just in kind of all capacities from a real estate mortgage insurance standpoint. Always welcome your questions, comments, thoughts. Alex and Brad, I'll share some numbers here. New homes for sale in the Twin Cities were down pretty significantly, down 20%. So there were 20% less new properties that came on the market, 1,271. And then pending sales down 36% year over year. So over a third less accepted purchase agreements. And this has been very similar to what we've seen the last probably 6 weeks, 8 weeks. There were 895 pending sales. And then the overall inventory still is very historically low. Historically low numbers of homes for sale in the Twin Cities, 8,934 homes for sale. Inventory, again, decreased just very slightly, down a little less than 1%. And the last number to share, this is a statistic that came out from Black Knight. It's some real estate data. They said that U.S. home prices are falling at the fastest rate since January of 2009, according to this data from Black Knight, as shifting market conditions have led many sellers to lower their asking price. Naturally, median home sale prices fell by 1% from July to August, marking the second consecutive month prices have actually declined. Although home prices are down, so they're down 2% from the peak in June, they still are up 12% from last year at this same time. Interesting numbers. I'm not totally surprised. I was looking through, just as an example, you may hear that and be totally think, wow, that's just an absolute downer. With our team, with the Minnesota real estate team, I was looking just at numbers this past week. And I think as a team, we had about, I think there were about 45 accepted purchase agreements. And so even though the numbers are down and things are slow, stuff is still happening. There are still deals getting done. And any thoughts, guys? Any commentary on this one?
Yeah, I think context is so important, those numbers.
Yeah.
It's important to understand the dynamics of what's going on in the marketplace, but also consider that your agent is a local expert, boots on the ground, and it's really these general trends sometimes are bucked by what's actually happening in a local market, on a block, in a neighborhood. And like you said, nice homes that are redone, good price point are moving.
Yeah, it is. Brad, these numbers can sometimes be, can be just a downer, and people can really feel like, wow, it is a bad time, based upon everything that you just read to us here, Ryan. But to Alex's point too, there are things still happening, not as quickly as earlier in this year, but any thoughts to share on that?
Well, I have a family member who's thinking about selling their home.
Oh, we got no mic there for you. Hold on one second, Brad. Let's try that again.
I have
Thanks.
I have a family member who's thinking about selling their home, and they're kind of in a conundrum. I mean, prices are going down. So do you sell now, or do you hope that they're going to come back? And are you going to get the right buyers, and those kinds of things? So yeah, I think the sellers are really kind of thinking twice about, do I lower the price and move to something else, or do I stay, or those kinds of things? Yeah
it is again, with those numbers, you have to remember, again, historically only 9,000 homes for sale in the Twin Cities. So that is a very, very low number. As I mentioned, we've done the show for over 15 years, and there's been times when there's been 36,000 homes for sale. So literally 4 times as many homes. And so it is still a supply and demand issue. Again, prices rose significantly the last few years. So if you've been a homeowner, you've enjoyed some increased equity, whatever price point area you are in, some more than others. And so, it's kind of like, I suppose, maybe any kind of market. You look at the stock market has kind of tanked this year. But when you look in historical context, it's still been kind of a slow and steady up sort of process. Same thing with home prices here in Minnesota. And so they are down the last few months. But Alex, it's more about pricing. How are you priced? How is the condition? Do you know your competition? Some of those types of things.
Yeah, I like that big picture view, because overall, like you said, like your friends are looking to sell. Like ownership gives you options, right? A lot of people aren't, once they get into a home, aren't stuck. They've got options to sell, right? But they could also rent it out, Airbnb, hold on. That's the important thing. It's a long-term move for most people.
Yeah, before the first break, do want to touch on interest rates. Obviously, the interest rate market has probably been the most significant change here in 2022. Why there has been a slowdown. And again, earlier in the year, low, threes, that type of thing. Alex, talk about what you're seeing in the mortgage world.
Yeah, you're seeing a lot of scenarios now getting priced out a little bit over 7%. So 7%, 7.1, 7.2 is pretty common out there. There's still options to buy down your rate as always, or get the seller to do that. But around the 7% range is where a lot of people are getting quotes these days.
Yeah, and maybe after the first break, what we did, Alex came up with a kind of a nice analysis of sharing just different prices here in the Twin Cities, and then looking at what the market was like in the spring. So again, in the spring, you were having to bid 20, 30, 50, 80,000, 100,000 plus over to get a house accepted, okay, at the lower rates. Well, now, in most cases, you're not having to do that. There are some multiple offer situations, but not nearly as many. And so Alex came up with kind of a good analysis that will look at the current market where maybe you're not having to bid over, but the interest rates are higher. And how does that affect, the actual numbers, the actual mortgage payment of what you're paying each month?
Right. Do you want to talk about some numbers now?
Yeah, absolutely.
Get me all excited, right? Okay, so like Ryan said, back in the spring market, looking at a $400,000 home, a lot of times you were having to go over list price for this to get it under contract. So let's just use the example of going $40,000 over list. So you're getting this home for $440,000 at an interest rate at 3.75. You're looking at a principal and interest payment at about $2,037, right?
Okay.
Of course, you got insurance, real estate taxes, maybe MI, right? But let's just say principal and interest.
Okay.
2,037. In today's market, you're looking at getting that home under list price, maybe a little under, right? Maybe you negotiate some seller credits, but let's say 400,000, you get this place. At an interest rate of 7.25, you're looking at a principal and interest payment of $2,728. So nearly at that price point, almost $700 more per month, right? Like if you were at the top of your affordability range at 400 or 440, maybe you're knocked down to a price range of about 300,000. But the important thing is that you only buy this place once, right? So there's only one purchase price on the day you close, but you have the opportunity to refinance down the line at a lower rate when the market sort of corrects down the line.
Yeah, we're going to continue that discussion here with Alex Grip from Illuminate Home Loans, Brad Sanford for Farmers Insurance. Thanks for the nice comments coming in on social media as well. Good morning to all of you as well. So thank you. Thanks for joining us on social media as well. Questions, comments, thoughts about the market, market conditions, what's going to happen, where are we at, anything at all, please don't hesitate. 612-294-6949. We'll be back after the break. Thanks for joining us on social media. A lot of good stuff. Coming in. Alex, those are interesting numbers. So in that case, it was a $400,000 house. So it was about what, a $600, $700 difference between those two amounts.
Right, and it depends on what side of the coin you are. Like, were you pressing to look for homes at the top of your affordability range, or top of that pre-approval amount, or was it, in a healthy range, right? So if you were near the top, maybe you're knocked out of that competition, not looking at those homes anymore. But if that was in a low debt to income ratio range for you as a buyer, that eliminated a lot of competition for you. So now you're sitting pretty and you've got more negotiating power there.
So Brad, again, we talked in the first segment, historically low inventory, not many homes for sale at all. Interest rates have risen, as Alex has been describing, but pending sales are down a third. So a third less accepted purchase agreements. Brad, are you seeing in the insurance world, I mean, similar things? Have you seen a pretty sizable tick back the last few months in business?
Yeah, I've seen a big tick back, and I see a lot of current clients calling and talking about their insurance, and wanting to see where they can cut, reduce the cost that it has on them each month. So yeah, it's affecting every industry, I would say, absolutely.
So have you seen that though before? Because that's probably not common. Most people don't. They just get their policy, pay it, and move on, or is it how common are those calls?
Getting them is not as common as me calling and going over the policies with them. So it has ticked up. Absolutely. It's changing the scape of insurance, and which is interesting that he talks about the $700 more. I mean, that really, like you're saying, how many buyers do you see that are at the max that they can buy, not at the lower end? Because it really, to me, it feels like it kicks a lot of people out. The rates doubling. I mean, weren't they at like 3.5 and now they're 7? That mentally for a buyer, I think would change quite a bit.
Yeah. And again, but I think it's sometimes it's hard, but it comes back to kind of perspective too, looking historically at interest rates, and also just I've mentioned a couple times on the show, but just being a small landlord here in the Twin Cities and seeing that side of the rental market. I think what's happened in the rental market too is we've just seen a lot of increased rents, a lot of rising rents, a lot of demand, and so it's like you got to live somewhere. So either you rent or you buy, So I don't know, Alex.
Yeah. So like you said, like owning gives you a bit more options and gives you a little bit more control in your situation, and a lot of homeowners end up in a better place down the line.
Yeah, had a good comment come in from Barry here too. We'll take that live on air. Yeah, I think we're going live on air. Here we go right now. Mike Dubs, have you seen these guys in concert? Right. I don't know where we're going, but I sure know where we've been. Isn't that the real estate market? We don't know where we're going. We're trying to all look at our crystal ball and offer our 2 cents based upon where things have been and where things are going. Appreciate folks joining us. Questions coming in. Thanks for so many people on social media with wishing us good morning. Good morning to all of you as well. Had a nice question come in from Barry. Barry said, Ryan, recently we completed a fairly major home renovation, updated doors, woodwork, hardwood floors, opening up a floor plan. Our next step will be to put in a kitchen island and to update kitchen cabinets. Would you recommend putting it on the market now with an allowance to cover these items, or wait until we have them completed? Thanks for the question, Barry. I think that I would be more of the mindset to complete the work and then list the property for sale. From an allowance standpoint, lenders, and Alex can speak to this, don't like to see so much of kind of these allowances. And so essentially what you'd be doing is just reducing the list price of what you put it up for sale based upon those improvements that are needed. So you could certainly do that. But again, putting your house up for sale often is, as they kind of say, sort of a beauty contest and a price contest. And so the buyers are going to look at it that way. They're going to say, okay, am I going to have to redo the kitchen? Do I want to redo the kitchen? Do I want to go through that whole process? I think what's probably more important, what I would say, Barry, is just timing wise for you and your family. Are you looking to do something sooner rather than later? I wouldn't remodel the kitchen in hopes of getting a lot more money out of the house. You'll find somebody that will still buy it as is, and assuming everything else is in good condition and such, you can find a very good buyer and get a good price. I just wouldn't do that update just for the sake of trying to get more money. I don't know, thoughts?
Yeah, I think we had a similar question last week, but a lot of times the return on investment or ROI on these things that a buyer would be looking for, you don't necessarily get 100% of your money back in return. Depends on the situation, right? But yeah, it's not as good as you think sometimes.
Plus kind of the hassle of doing it, Brad. I mean, I think that's the hard thing about it is the hassle of kind of going through that, especially now, having a lot of good friends who are, plumbers, electricians, do kitchen cabinets or countertops. They're busy.
Really
They're busy. They're booked up. Schedules are tight. It's a long process to get that kind of stuff done.
And that's really what we all fall into as homeowners, right? Is do we change our house so that we can get more for what we think it's worth, or do we leave it as is and will it sell, or will it hold us back from it being sold, or those kinds of things. So I think that's great advice that you gave. Is just absolutely, is this the time for you to move?
Yeah.
Or is it the time to stay and fix it up?
And again, you can do simple things, simple things like, carpet, freshening up the carpet, putting in new carpet, new paint, lightly staging the home, having a professional come in. That's something we do. The Minnesota real estate team does. Will come in, advise you on staging without having to, spend a ton of money. But just some simple things that you can do that can make that beauty contest make you stand out a little bit.
Yeah, but our guy right there, most likely just finished the job. There's levels to it, but just like get done, because it might complicate your situation when a buyer comes along and they need an appraisal, because the appraiser might just want to see the work get done anyways.
Yeah.
Yeah, if you're in the middle of a project, definitely finish it.
Yeah. Well, and especially from an insurance, is it hard to insure in that case? You come in and it's just a halfway done. Let's use an example. This is not for Barry's case, but halfway done kitchen.
It's a question on the application. Is it under construction? So
there you go.
It would weigh into, yeah, absolutely.
Is it under construction?
Which, our house is always under construction. My wife has a honey-do list. We just recently remodeled our laundry room, and we brightened it up and painted it and brought in the white cabinets and kind of opened up the space a little bit more. It makes it a lot more attractive. So for selling our house, we think that adds value, right? But as you guys are pointing out, it may be just like somebody expected that and they didn't know what it was like beforehand, right?
You know what's also under construction? Each of us.
Wow.
There's your deep thought.
Deep thoughts.
Your deep
Right
thoughts
on.
under construction, our lives. Hey, I have to give a shout out before I pass the torch here for some more conversations with Brad Sanford of Farmers Insurance. I have a nephew getting married today, Mr. Danny O'Neill. Kirsten Schambauer are getting married today, and super excited for them. For the families, that's my oldest brother, Dan, Dan's son, Danny. So congratulations to the whole family, to Danny and Kirsten. It's going to be an awesome wedding up north in the Brainerd area. So heading up there after the show, but just really excited for them and their future life together. So happy early congratulations to you, Brad. That'll be a fun wedding.
Yeah, absolutely.
Fun wedding. You texted me some good stuff about your thoughts for today's show.
Yeah, just a little teaser for the segment is a spooky, because it's Halloween, October, right? A spooky mistake that, according to a survey, 60% of all homeowners are making today.
Tell me more. 60% of homeowners are making.
That's a tease. We'll do that when we come back.
Yeah, it is 60, say it again, 60% of all.
60% of all homeowners are making this mistake right now.
Yeah, I had a question come in again, 612-294-6949. This one is for Alex Grip. Alex, what percent of purchase agreements are including seller paid contributions right now? Are you seeing more in that capacity?
Yeah, nearly 40% is the latest stat I heard around the Twin Cities. So it's becoming super, super common. That's a win for both parties. One, the seller doesn't have to reduce the price as much just to get traction. A lot of times, giving seller credits or these seller concessions, whatever you want to call them, closing costs, will be a win to get a net offer that feels good, but also give the buyer some ammunition and some options with their lender.
Have you seen, and by the way, I want to congratulate, I went this week, Alex's company, Luminate, had an awesome open house at their office, which is just right on 394, close by here in St. Louis Park, but just had a wonderful open house at their office. Super impressed to see this office space. Eric Lovins, Taryn Reuter have really just done a wonderful job. A great group of folks. It was so fun chatting with. You've just got a wonderful group of other loan officers you work with over there.
Yeah, absolutely. I think when you get face to face with folks and see how hard everybody works, like I think at Luminate we do an amazing job of trying to humanize the financing process and not just make it any transaction. It really matters to each of us.
When you're talking to your other friends at Luminate regarding low appraisals, so like the last 2 months, we just talked about, okay, if prices are coming down, are you hearing much from the other gals or guys, the other loan officers that you're working with?
I haven't heard a lot of people dealing with that. I personally have had a couple low appraisal situations recently, but I think that's a point that people freak out during that time. But just know that as a buyer, you've got a few options. And the reason why people get nervous is because a lender can only lend on the lower of the purchase price or appraised value.
Sure.
So sometimes we can adjust the financing to keep everything the same.
Had another text message question come in, 612-294-6949. Tanner texted in saying, can I back out of a purchase agreement during the inspection for any reason? Interesting. So basically what he's saying is he got an accepted purchase agreement. Now there's an inspection contingency, and can he back out for any reason? The reality is yes. Buyers can do that. Buyers can back out because they get cold feet. Buyers can back out because because the Vikings won last Sunday. They could back out because it snowed on Wednesday. It could be any reason at all during that time period. That can be a hard thing for people to understand, for sellers to understand. And that's why you want to minimize that time period within reason. You can't just have it at 1 day for the inspection contingency because inspectors are busy. But you don't want it at 30 days either, because that then holds your purchase agreement up for 30 days, guys. So that can be a hard lesson if you're stuck.
What do you feel like is a good reason during the inspection period for someone to back out as a result of the inspection?
I would say serious structural items that I've found, serious home issues with the property, and you've been unable to negotiate with the seller to come to a resolution. So it's more really house related, can't negotiate it, can't get it done. And sometimes that happens. The sellers just say, look, no, we're not going to give you a 10 grand reduction because of the roof or because of whatever. And so at some point people just don't agree, and then the deal falls apart.
So it has to be related to the inspection then?
It does not.
Does not.
Does not. They could drive by and just say, you know what, based upon the home inspection, my buyer's canceling the purchase agreement. The agent doesn't have to give you a lot of detail. They may just, have a nice conversation with you about it, but the reality of it is they don't have to do anything.
As a selling agent, seller paid closing costs. How does that affect your client? When they hear that they might have to pay, do they like that, or do they look to a different offer? Is it a big deal? I mean, it's been going on for a long time now, right?
Yeah. Let's hold that thought until after the break. We're at the halfway point at the Minnesota Real Estate Show. If you're joining us on social media, thank you. Thanks so many for the nice comments. Mark, awesome fellow agent, some comments, and a lot of other folks too. Thank you. Thanks for joining us. 612-294-6949. We'll be back after the break. To your question.
You know what? All those subprime buyers came in.
Yes.
That seems to be when we had a lot of the closing costs being, put into the purchase, and now it seems to have completely continued. That's what I feel? Is that right?
Yeah, those are unrelated.
Yeah.
Like just because you're getting seller, like as a seller, what seller concessions mean to you is like, we're gonna give you an offer, let's say 400,000 and ask for 10K seller credits. That's now a net offer to you, a 390. Right?
Sure.
But like
So the buyer is financing it in that case. So to your point,
Yeah.
you're increasing the price by 10 grand to cover those closing costs essentially.
Yeah. However it works, there's gonna be a net offer to the seller. The purchase price and net with the seller credits matter to a seller because they get all their money in one day. But a buyer doesn't pay $400,000 for a house in one day, right?
Sure.
It's a monthly payment thing. So what seller credits allow somebody to do is just save more money out of pocket, because there's always going to be like 3% of seller of closing costs for the buyer, and to have somebody cover that or finance it, however you look at it, it's going to be a good deal. They still have to get underwritten. Their debt to income ratio still has to be below a certain percent. We still got to play by all the credit rules. Like,
Right.
yeah.
Is that considered a seller concession?
What's that?
Paying the closing costs? Is that kind of like
That's saying the same thing.
so
Yeah.
lender only allows so much of that, right?
Yep. Yeah. So you
Yeah.
can only build in so
Yeah.
much.
Yeah.
So in other words, you couldn't say, I want 30,000 in seller paid closing costs.
Yeah.
So each lender or each loan type has a certain amount.
Yeah. So like if you're doing a conventional loan and you're doing less than 10% down, I believe it's a 3% max. FHA is 6% max. VA is 4% max.
Yeah.
So it depends on the type of product.
Yeah.
If
Good.
If you're doing 20% down conventional, you go up to 9%.
Yeah.
So
By the way, check out if you are on Instagram a lot. Check out my friend Alex. His handle is Get a Grip.
get a grip loan.
Oh, Get a Grip Loan. Sorry,
Yeah.
2 P's. Super cool. He's got a lot of good informational videos. Does a really nice job with it. So be sure to check out his stuff. Brad, are you an Instagram guy?
I just started. Yeah.
Hey, there we go.
Right. Right.
Have a lot
I'm
of
putting you on the
followers.
spot,
Yeah.
right?
Nope.
Um,
I always forget to post to it though. So I'm glad that my Facebook goes to it, right?
sure. That's good. That's really good. Good stuff.
But I'm glad you brought up that seller concession thing because I think there's just a lot of like perceptions out there for people
Sure.
who lived through, 2006, 7, 8, 9, around just the perception around that.
When I was a banker, it was perceived that your buyer was less strong because they needed the seller to pay closing costs. That was the perception.
Sure.
I look at that buyer as smarter.
Sure.
Like
Sure.
I would do the same thing if I was buying something today. I would max out my seller credits, buy
Sure.
down my rate.
Well, and again, I think part of it is that the buyer has to realize there's costs. Again, when you're buying a home, there's going to be costs. And to Alex's point, you either pay those costs out of your pocket at closing, and it's on the closing document is called an ALTA. If you want to be kind of super smart as a consumer and say, I want to see my ALTA, which is short for the American Land Title Association, but that's the document. On the document, it'll show you have to bring more money to closing, okay, if you don't have seller contributions.
There's so many people that help make one purchase happen, and they all want to get paid on closing day. So
Sure.
those are what those closing costs are.
Right. Yeah.
So,
Do you want to get paid on closing day, Brad?
Yes.
you gotta pay insurance,
More and more.
the county,
Insurance.
title, everybody wants to get paid.
Oh, it's a lot.
Realtor,
Real-
loan officer.
Yeah. If you're thinking of other questions, comments as we're talking, please don't hesitate to interrupt too. We are going back live on air right now. Twin Cities News Talk AM 1130. Hope the weekend is going well. Hey, welcome back. Thanks for tuning in. Thanks to Mike Dubs from K102 to come on out on Saturdays. You got to listen to him. You probably already listened to him on K102, but appreciate him always coming in. Got to give a shout out, new listing 13233 Galena Way in Apple Valley. Brand new on the market. It's 419,000. And this is a 3-bed, 3-bath home. It's almost 2,500 square feet. Laura Antolek on the Minnesota real estate team has this listed. It says, rare opportunity to own a well-maintained N-unit Rambler in a small community and on a quiet street. It's 1-level living. It's got high ceilings, lots of light, plenty of space. Main floor has a primary suite, laundry room, vaulted family room, kitchen, living, dining room, 4-season porch, private wooded backyard with maintenance-free deck. Again, it is a townhome, very nice looking property as you check this one out. And open houses. John Kapuska with the Minnesota real estate team. He's going to be there today from 12 to 2, hosting that one open. And Mr. Eric Sharbo is going to be there tomorrow, Sunday, 11 to 1, 13233 Galena Way in Apple Valley. Definitely check that one out. Brad, you gave a little teaser before the show or before the break. Talk about that again.
So the spookiest for Halloween, biggest mistake that homeowners are making right now is they are not having a conversation with their insurance agent and making sure that they are not underinsured.
Mm-hmm.
So you look at your declaration page and the number that you are insured for the dwelling, the cost to rebuild that home changes over time. Like
Yeah.
right now, materials cost a lot more than they did before, right? So you could be, and according to MBS, which is a national construction evaluation firm, they say that 60% of Americans are underinsured right now. So have a conversation with your insurance agent and have them go through a valuation of, as you guys were talking about, the last listing, a composite deck and the basement is finished, what kind of fixtures you have in there to get that real value of, in case of a tornado, in case of a fire, it gets replaced to what
Or a
you
flood.
had. Or
We're in Florida.
in
So-
Florida.
Help me understand, okay? And I'm going to play devil's advocate here, Brad. So if I'm a home buyer, or I, 10 years ago, bought a house, went out to my insurance agent, got the policy, and I assumed, she did a great job, got the policy for me. I assume I'm covered. You know what I mean? I have house insurance.
9 times out of 10, you get enough insurance coverage to cover the mortgage, right? Very rarely do you go through, as of late, we are going now and doing a whole evaluation of the home. So you want to stay on top of that number. Likewise, if you call me, you have your insurance with me and you call me and we do a valuation and it goes down, we can talk about bringing it down and saving you some money because you're insuring it for what it costs to rebuild it.
Isn't there that annual inflation deal, though, that just pops up on the policy, said, hey, lumber's gone up, this has gone up, we're going to charge you an extra $200 this year.
Insurance companies, yes, what we do is we take what your neighborhood valuation has increased, but a lot of times that isn't enough to cover what the costs to rebuild a home are.
That's I hope everybody, again, that's really good sound advice to just, to reach out to your insurance person. If you don't have one, I certainly would encourage you to reach out to Brad. That's really good information to know because I think people think they're covered. Quick example, in Florida, I was reading and I don't know a lot about the specific companies, but they were talking about flood insurance. And everyone thinking I've got flood insurance, but then it differentiated the types of floods. In other words, how was the flood caused? Was it storm surge? All these different things. And in other words, are you actually covered? And some people were finding, oh my gosh, we just lost our home of 50 years. We're not covered.
That would be a tragedy.
Thoughts on that at all, Brad?
That's the worst scenario that an insurance agent can have, and the worst conversation that you can have with one of your clients is the coverage isn't quite there. It's one of the things that you can do to mitigate having that loss of value, not having enough and not being underinsured, is what we call extended coverage. So you can get an extra 10%, 25%, 50% that will cover you above and beyond.
Hmm.
But a lot of times you talk to clients and they don't want to overpay for insurance, right? You don't want to be over insured. So it's that fine tune, filling it, getting it taken care of getting it to the price and the coverage that you need for your home and for you
I
specifically.
had a question come in for Brad. This one is from Reed. Reed said, what do you think of the philosophy of having a super high deductible to keep your annual costs for insurance lower?
That's another math problem. So if you have a high deductible, like you choose, we're seeing a lot more now for wind and hail. We're seeing 1%, 2%, up to 5%, right?
Is that the max? 5%?
5% is the max. Yep, absolutely.
With farmers or with all companies?
All insurance companies. Yep,
5%.
5%.
Wow.
And so if you choose to go that route, that means you're going to pay for, if something happens, you're going to pay for the deductible either way, right? So if you have a $1,500 deductible, your premiums are going to be higher, so you're paying for that difference over time. If you have a 1% deductible, then all at once, you're going to be paying that premium, that deductible, to take care of the issue that you have with your home.
Do you have many people do that, Brad?
I'm seeing it more now. I'm seeing it in the higher end homes.
Hmm.
Absolutely.
But so that in that case, you need a new roof, then you're paying 3% of the expensive house to
Yep.
put on a roof.
And if
That's no joke.
And if the roof is $30,000, that's $9,000. Yeah.
Yeah, that's a really good question. But I like Brad's comment to and point about reaching out to your insurance agent. I suppose it's probably like you could say it's like a physical. You need to, you know what I mean? You need to check in. You need to check in and say probably not to that level. But again, I mean, people assume they're insured, and if you just said 60% of us are not insured enough, that's a problem.
That is, and that's something that needs to be. You need to talk to your agent. A lot of times you buy a home, you bought it 9 years ago, you haven't talked to your agent for 9 years, right?
Right.
That's what I think is the major cause of being underinsured.
Or you may not remember who your agent is.
Brad
Brad's like
Sanford, Farmers, 651.
Hey, I do before the break, I've got to give a shout out to my friend Brad. Helped a friend of mine this week, just very last minute. Called him, texted him, got a hold of him very quickly, very easily, called me back, helped my friend get car insurance, shopped a number of different places, got some great rates. And so if you are looking for somebody that will pick up the phone, that will call you back, that will get a hold of you, or that will provide great service, that's why we work with Brad and Farmers. So thanks for doing that, Brad. Super appreciate your customer service.
It's my honor to be part of your team. The fact that you're helping someone that is a family friend, and just dropping everything to help, that really says a lot about you.
Nope, it's all good, man. We're at the 3/4 break here at the Minnesota Real Estate Show. We've got a few other questions to hit before the end of the show. You're welcome to join us at any point. 612-294-6949. Alex, a couple of those other scenarios, share the other price point scenarios again, the analysis with the interest rates that we talked about a little bit in the first segment.
Sure. For our live viewers here.
Yeah, just thoughts were again, and
Yeah, different price point here. At list price at $225, for example. In the spring market, going 40 grand over, what does that look like? Getting this place under contract for $265. You're looking at a principal and interest payment of $1,227 with a rate of 3.75, right? Spring
Okay.
market, so about $1,227 you're paying on a monthly basis, just principal and interest. Now, today, you're looking at a principal and interest payment of about $1,534. So going up about $300 in that mid to low $200,000 range.
yeah. So I think that's a really good example of what buyers are seeing, feeling, and part of what we're seeing with some of the pullback on prices. Interestingly enough, against a lot of listings are sitting because some sellers maybe have inflated expectations of early in the spring, what someone down the street may have gotten for their house, and they're trying to grab that number. So just be sure that, again, with your agent is really helping you analyze the current market conditions, the current inventory, the last couple months of sales, talking to a mortgage professional like Alex, so you can understand what buyers are seeing and feeling. Because again, for an extra $300, I mean, that's real money for people.
Yeah, importantly, to have your agent, lender, and yourself connected, because things are changing quickly these days. So we're out at the top of our pre-approval range. You're out there looking for homes, and you're like, "Hey, we're gonna put an offer on this place," and then I come back, run some numbers, and like, I don't know, like, it's not looking good to get pre-approved because your debt to income ratio has gone up, the rates going up. Today's scenario, like, it's important to be in sync with what we're doing.
Yeah, really good points. Brad, do you have more on your honey-do list to complete?
I do. I think next year is the deck. So
Next year's the deck?
yeah, absolutely.
Actually, speaking of decks, our buddies at All Around, Charles Thayer, Nick Zeman, longtime partners on the Minnesota Real Estate Show, they do an awesome job. Really good guys, great company, great exterior company.
They are.
I need to get their card.
Yeah, they're good. Good. You've heard their ads, the All Around ads. Charles, he's a creative dude. He's a super creative guy, but a lot of fun too. Their show is at 12 noon again every Saturday. So we're a partner on their show. We're their real estate partner. But here we go. We're going back live on air for our final segment here on the Minnesota Real Estate Show.
Yes. Sure.
Yeah, welcome back to the Minnesota Real Estate Show. Hope your weekend is going well, everybody. My friend, Mr. Fong Keo, Remax Advantage Plus, the Minnesota Real Estate team's got a new listing in Oakdale, 4967 Greenwich Avenue in Oakdale. This is priced at $235,000. It is a townhome, 2-bed, 2-bath, 2-car garage. The sellers are motivated, Fong said. It's an end unit townhome. It's got a wonderful outdoor space. It does have a basement, open floor plan. It's got a composite deck, light and bright living room. Kitchen features tons of oak cabinets, solid surface countertops, a breakfast bar, laminate flooring. It also opens up to the formal dining room with the laminate flooring. The half bath has a pedestal sink. It's got a ton of greens, lots of green space, mature trees, extra parking for guests across the street. Super convenient location, Fong says, with parks, schools, shopping, and more. Check that out online. Check out the pictures, too. A very nice looking townhome, 4967 Greenwich Avenue North in Oakdale, 2-bed, 2-bath, 2-car garage. Brad, what do you think?
You know, I was just talking to Alex offline, and I was asking him, you know, you're caught in that situation of you love this house, right? And you have to pay $300 more. What does that equate to in income? How much more do you have to make to be able to afford that home?
Good point.
Yeah, so if we're just talking about principal and interest, it's about $6,000 more in income. So
There you go.
hopefully you're getting a raise. But to your point, Brad, it becomes more dramatic the higher you climb in purchase price and needing that approval. The gap between what you need to make in the spring and what you need to make in today's market. So important to work with your loan officer, find that pre-approval, that amount that feels good to you, and not going up to your max all the time.
Yeah, we shared it a little bit last week, but I'll mention it again, especially for a lot of the fellow agents, brokers that may be watching or listening. In this type of market, I think it's easy to have high anxiety because things have changed pretty significantly. And, if I've learned anything since being in this industry since 2001 is, markets kind of come and go. We saw the time when everybody could get a loan. You could fog a mirror and you could buy multiple properties, with zero money down. We saw markets where there were tons of bank-owned listings, tons of short sales, 36,000 homes on the market Nobody's buying anything, high interest rates, low interest rates. And the reality of it, especially here in Minnesota, I think a lot of outside people maybe who move to this area think, oh my gosh, does anything happen in Minnesota, in the wintertime, especially with this market? The reality of it, again, even with a team like ours, we're a very small part of the market. But again, 40 accepted purchase agreements in the past week. So things are happening. People are moving. Life happens for all kinds of different reasons. And so I think, again, the agents, the loan officers, the insurance people that are focusing on you as the customer, that are providing you good information, that are focusing on what they can control and not getting too wound up about everything else that's going on in the world. Those are the people that you want to kind of partner with and align with, because the reality of it is, yeah, we may see people leave the mortgage industry, the real estate industry, a variety of the real estate capacity. But again, it's like any market. If you're working hard, you have a positive attitude, good things happen. And that's, again, Alex, Brad, that's why you guys are doing well. That's why we have you on the show. And it's a stressful time. And I think perspective, Alex, you brought up a good word. I think people have to remember that.
Yeah, absolutely. Each one of us is dedicated day in and day out to helping people and providing clarity. We are doing this every day, seeing, living, breathing, all of these changes, and really working with a professional who's doing the same thing is going to give you the best advice and have your best interests in mind and set you up for success.
Yeah, because again, I think spring market, if you are a buyer and maybe you're thinking about waiting until the spring, you have to remember, my feeling again is there's so much in a lot of our listings. We're seeing so many saved searches on MLS, which means that there's a lot of buyers that are still there that haven't purchased yet, in these multiple offer situations. This time of year in the fall and in the winter gives you a chance to negotiate more, to try to get maybe a little bit more of a deal, to not have to be one of 50. And so, there's nothing wrong with, again, continuing to move forward, trying to find that house, because again, a lot of people say, I'm going to wait till the spring. Well, then even with these rising rates, I think with such historically low inventory, we're going to see strong demand and multiple offers next spring again, guys.
Yeah, and I've heard in the past that the Twin Cities is going to grow to 7.5 million people, by 2030, 2035. So you absolutely are going to be in the market where, like you said, it's up and down, right? It's going to be where it's a buyer's market. It's going to be where it's a seller's market, and working with professionals that care about you. Like every one of my clients, I consider them family and friends.
Yeah.
I was just laughing on the phone with a client Thursday morning. We were having a great conversation. So it's, I think you have to work with people that take their job seriously, but also can have fun.
Yeah, absolutely.
In the mortgage world, we're just crying with our clients. So it's just a lot of tears.
But you're empathetic. You're empathetic. You're
Yeah.
empathetic. You've got a high emotional IQ, right?
Empathetic perspective.
Empathetic.
Right.
You know what's funny? It reminds me back in the day. I think of mom, my mom. We always, and my grandma, her mother. We used to love to watch The Price is Right. It was like 10 o'clock in the morning. I just remember as a kid, and one of the games on there was the guy that was the little. It was like the little hiker or the little yodeler, and it was the guy that was kind of. He was kind of yodeling, but it was showing him, and he was kind of hiking. It was a hiker, but he was going up, slowly, and eventually he fell. But what's interesting, and again, coming back to the word perspective, what makes me think about this, I think if you're a home buyer or an investor, you have to give yourself some time. So if you're buying a home right now, give yourself 2 years, 3 years, 5 years, 10 years. When I look back at some of the real estate I've purchased, did I really care whether I paid that price or $10,000 more? 10 years later, thanks to Minnesota for population demand, a strong labor market, all the good things going on here, we've seen slow and steady price increases, especially if you're under that probably 350, 400,000 price point. you are going to be thanking yourself that you've purchased 5 or 10 years from now. And I think that's the point, the perspective with it. Even rates at 7%, you have to look big picture as a tenant, as a renter. Get in the game. As a friend of mine said, buy some stuff. In other words, buy some real estate. And that's where, again, that generational wealth can be created.
Ryan O'Neal, New Prague Hall of Famer. Just got some Hall of Fame advice there.
Hall of Famer. Oh,
Well, the perspective is the Twin Cities, we really don't feel the ups and downs like the West and East Coast do, right? So
Yeah.
historically, we're a little bit more sturdy. So if we're feeling it, it's happening all over. So
If you're a buyer, you ground yourself in the monthly payment. That's what you care about.
sure.
You're not going to finish this loan, most likely, right? You might be in that home for 7 to 10 years. If you're a first-time buyer, maybe you hang on to it. You'll probably refinance. If you're a seller, you care about the sale price, right? Or the purchase price of someone buying your place. But if you're a buyer, you care about the monthly payment.
Really good
And,
advice.
That's what you're looking for. As long as you're comfortable with that, most people are happy they bought something 5 to 10 years later.
Yeah, what's interesting is I've refinanced multiple times. So to your point, that you talk about, just, find the house that you like. Sometimes you think, oh, I'm going to have this loan for 30 years. Well, then life happens. Markets change. 2, 3 years, 5 years. You refi,
Your
save
family
some money.
grows.
Yeah.
Yeah.
Absolutely.
if your honey-do list gets too big, call Ryan so you can buy a different house.
Hey, last thoughts, Brad Sanford. How do people get a hold of you? And really good content as always today.
MinnesotaRealEstateTeam.com.
Yeah.
I'm under the insurance tab, or you can give me a call at 651-690-2076.
And the good thing is Brad actually picks up his phone. Thanks for your help again with my friend this week. Alex, last thoughts for folks today?
Yeah, a lot of opportunities out there. I would say, like, if you're a VA or FHA buyer, now's the time to get in. Less competition, and get out there and buy some stuff, as Ryan O'Neal would say.
Yeah, buy some stuff. Thank you. Great job. But check out Alex Grip. Again, Get a Grip Loan on Instagram. He's got a lot of awesome content. Fellow agents, I encourage you to reach out to Alex. He does a wonderful job. We'll take care of your folks. I had a comment. Pete said, Ryan, you can watch all the old Price is Right episodes on Pluto TV. I love it. Gonna check out some Pluto TV. Hey, it's been a lot of fun. Appreciate you joining us on the Minnesota Real Estate Show. You're looking to buy, sell, invest. The Minnesota Real Estate Team is here to help you. We've got agents really all across Minnesota, Western Wisconsin that are here to serve you, that know your neighborhood, area, price range. We work at your pace. We make the process fun and produce results. Have a great weekend, everybody. Take care. Thank you. Thanks for joining us. Alex, we had one last comment. Barry said, Ryan and Alex, I know a lot of the scenarios you're talking about that are tied to financing. It's important to remember that there are a lot of cash buyers still a lot of cash buyers in the market.
There could be.
Yeah.
I feel like the largest percentage of purchases are still going through financing.
Yeah,
for sure. But there's cash buyers out there.
Thanks for joining us. It's been a fun weekend. Take care, everybody. We look forward to seeing you next week. Enjoy the weekend, and shout out again to these guys for a great job in